Morning, Dave. We're kind of sorting through, noodling what the Sam Hill's going on Wall Street with Phillip Statler, and well, things got a little bit weird when the inflation numbers came out this morning. So let's check in with Phillip Statler from Statler Financial Services and get his take on the situation. Phillip, good morning. How are you today?
Hey, good morning, David. Doing well halfway through this week. And yesterday was a mixed bag, but today, I got to say, Dave, there's a lot of red ink out there.
Afraid you were going to say that to me. Yeah, setting the table for the morning, the markets yesterday, we had the blue chips on the Dow down by about 93 points, but Standard & Poor's went up by over 0.4%, up the better part of 25 points, and NASDAQ was up by 141. That's 0.8% on balance, a balanced portfolio. Probably ended up with a positive day yesterday, and then we get the fabled inflation report out this morning. This is the thing we've been kind of pre-teasing all dang week long. The Consumer Price Index, the last reading on inflation before the Federal Reserve Market Committee meets next week to determine whether or not they're going to kneecap us with a disappointment on interest rates. The overall Consumer Price Index last month, pretty close to what was expected, 0.2% increase, but the annualized number up a little bit from expected, 2.6%, still a little bit better than it was last month. It was the core that I think is probably causing us some difficulties because they expected 0.2% increase. We got 0.3% increase, and the year-over-year number on the non-variable inflation numbers, still 3.2% inflation on the core CPI. I got to assume a lot of interest-sensitive stocks were not happy to hear that.
They were not. I mean, when I was watching kind of the futures, they basically doubled down from what they were heading into that call that came out. So now we're solid red across the board when we look at where the futures are lying right now.
Yeah, and somebody is going to end up saying, well, what's 0.2, 0.3? No big thing. I mean, consider how big the economy is and what 0.1% can actually make in terms of an inflation rate. I was saying back months and months and months ago when I saw the money supply starting to inch up again inexplicably, that inflation was going to be a little harder to beat than they thought it was going to be. And I hate to sound like I was yelling, I told you so, but 3% inflation is not atrociously terrible, but when you're shooting for 2 and you've got a policy board meeting next week to determine how much you're going to cut interest rates, I got a sneaking hunch that half-point interest rate cut just went out the window into the backyard dumpster. What do you think?
I'm thinking so. I mean, of course, we got another important number comes out tomorrow, but I'm thinking that if I'm the Fed looking at this and I'm looking at other data, I don't think I'm going to go a full 0.5% right now. I think I'm going to back off and do the quarter point and see what that does because I've still got time left this year. I can still make adjustments. So I think I would start slow and then progress. And if we need another a quarter or maybe even do something out of the ordinary, right? Let's bump it 1/3% in future meetings. Then that gives them the leeway to do that.
Absolutely, and I think that probably is what the cooler heads of the Federal Reserve are thinking right now. By and large, I always check what the odds makers in Chicago say because the Chicago Mercantile Exchange will bet on just about anything. And they're betting right now, this was as of this morning before the inflation number came out, 75% chance of a 25% basis point cut in the interest rate. The other 25% going in favor of a 50-point cut. And I'll bet a nickel by the time they update those numbers tomorrow morning, the 50% cut probably is down around 10% right now.
I mean, that sounds reasonable to me, Dave, based on the numbers we've been seeing.
Pretty close to it. One thing I did hit, one of the other things the CME people are saying is the rate markets, the bond markets, they're baking in what they're expecting to be a full 1% cut in interest rates by the end of the year. Now, that does give us, like you said, they've got 2 other meetings after this meeting to contemplate, but the bond markets are still thinking we're going to have a big interest rate decrease before the end of the year, and I kind of think that's irrational optimism at this point, don't you?
I do too. I do see. I'm looking at a 30-year Treasury right now. It's down below 4 again to 3.97 right this second.
It does kind of imply they're thinking 100 points or maybe even more. Talking about inflation and whatnot, we have two kind of bookending stories about our dear friends at J.P. Morgan. Jamie Dimon gave an interview the other day, and he said, looking at the numbers that we've got right now, he wouldn't rule out, and this is a dirty word we haven't used for a long, long time, he wouldn't rule out the economy sinking into a case of stagflation, which dates all the way back to the Carter years.
That would not be good, Dave. I'd rather have a a little recession and get through it, and then to suffer the whole stagflation deal.
Absolutely. We're all still crossing our fingers. It still does, I mean, just for the sake of calmer heads, it still looks like we're heading in the direction of a soft landing, but they just kind of pulled the flaps up a little bit on that, and we're not quite landing yet would be a good parallel to it.
Well, yeah. And he also came out and basically made some changes in their guidance. He feels like with interest rates falling, their interest rate income is not going to be as high. And he's not really optimistic that they're going to be able to keep their expenses at that $94 billion next year as well. Now, they fell as much as 5% yesterday after that came out. They're still trading down this morning by about another third of a percent.
I'm going to kind of bet that might have been the overriding thing that pushed the Dow down yesterday, wouldn't you suspect?
Well, it very well could be, because it doesn't take much of that price-weighted index to do that.
Absolutely. I've gotten into periodic arguments on Facebook with friends talking about how the Dow determines the market, and when Boeing slips 5%, everything else is up, and the Dow goes down, or J.P. Morgan does the same thing. I mean, the Dow can be weird. The S&P is a better reading on the overall blue chips, isn't it?
Yeah, it really is. Yeah. Hey, talking about earnings, I did finally get my little tip sheet came up. It's always a little late sometimes. But I did get Dave & Buster's, the playground for adults to have their adult beverages and still play some video games. They had a really good quarter. They came in at 15 cents. They beat estimates by 15 cents a share. Now, revenue was a little bit short of expectations, but not hurting the stock at all this morning. It's up a little over 12%.
We need a Dave & Buster's around here.
That would be entertaining.
It really would. That and a bowling alley and a skating rink and all the other things they want on Facebook.
Now, I will tell you, Dave, after the debate, Trump media is taking it on the chin.
Oh, because they were going up before the debate.
Yeah, they didn't like the debate, I guess. It's trading down about 15% this morning.
Just talking politics instead of economics for a minute. All the talking heads were saying that if Trump could stay on message, on track, and do what he needs to do, he had a good chance of winning it. And then Harris managed to goad him into repeating that Facebook rumor that the immigrants were eating dogs in Iowa, and it just kind of went downhill from there. I mean, it's easy to get the guy's goat, and that didn't help him one tiny little bit in the debate last night, because all of the main media, that's the headline for the thing. Trump says immigrants eat dogs.
Yeah, you add that with the fact of who was the moderator. That didn't help anything either.
Oh yeah, your real-time fact checking when it's only on one side doesn't help a bit. Setting the table again, blue chips were off by a little bit yesterday. Maybe J.P. Morgan the primary cause of it. The other major indexes were up. Not the favorable inflation report we were hoping this morning. Put it into a big ball 45 minutes early. What are we looking at, sir?
Well, the Dow has fluctuated, but it has started to come back down a little bit. We're only off by about 181 points right now, almost 0.5%. The S&P 500 is down by 0.25%. The Nasdaq 100 is down $29, which is between 1/10 and 0.2%. Russell 2000, big loser right now, down 0.8%. Hey, on the commodity side of the store, we've got silver up almost 0.7%, still well below 30 at 28.82 an ounce. Gold is actually down a third of a percent right now. Crude oil, Dave, it's up 1.8%, but you got to love this number, Dave. It's up. It's trading at $66.94 a barrel right now.
I never thought I'd really love that number, but compared to where we were a couple of months ago, I'll take it happily, won't you?
I absolutely will. I like the direction it's going overall.
Absolutely. Overseas markets, the Asian Rim market, almost exclusively off, except for the mainland Chinese market. They're kind of happy with the Hawaii new trifold cell phone. And they're holding it up against Apple and saying hoo-ha, and that's got the Chinese mainland markets up. Everybody else was off at the close at 6 a.m. this morning. European markets are a mixed bag this morning, mostly up. The UK markets are off by about 0.25% on balance, though the European community between 2 and 0.4% up halfway through their trading day. Retirement, make a plan. You can actually then afford to retire. Don't have a plan? Who wants a crapshoot? How do I find you to get that plan going, Phillip?
Dave, that's why I developed the core retirement design to help people plan that retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back here tomorrow morning to see how much damage the inflation report did today and what the producer price index can do tomorrow. I'll see you then, all right?
All right, man. You have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us. I really appreciate you being here day in and day out. I hope you'll join me again tomorrow, same time, same place. Until then, have a great day. I look forward to seeing you soon. Bye now.